Testing audio. Hey there, this is David Cox, Senior Portfolio Manager at Financially in Sync at Raymond James in Waterloo, Ontario, Canada. Today in the webinar, Where Do We Investors Stand? It is Friday, May the 23rd, 2025. I apologize, this webinar has been a little sporadic recently. I was in Chicago last weekend, a fantastic city. Had a great weekend, and next weekend my middle son is graduating and I'll be in Colorado, so again there'll be no webinar next week, but let's get into it this week. See off the top of the week here, we'll look at Bitcoin for sure because it went to new highs. Gold continues to be strong, and then down at the bottom here we've got a little bit of a pullback here. It's very short term, very small at this point, but we'll get into it. Of course, remember, pause your video player at any time for more details. So get US and Canada here. So US stocks on the left and Canadian stocks on the right. Now Canadian stocks have actually benefited quite handsomely from all this business about trade wars and global tariffs and all kinds of stuff. Now again, I say that almost tongue in cheek because again, things don't always work out the way we expect them to. So the Toronto market has been underperforming the US market for a very long time. We need to keep that in perspective. But the bottom line is kind of sold off here a couple days ago in the US market. It starts to look like I can print a lower high on here. Again, lots of work to be done, and these are daily charts. Remember, it's so important to zoom out. I'm going to help you do just that in a moment. You can see the TSX a little bit different here, breaking out to brand new highs, and then now sitting at that breakout line. So look at Bitcoin on the left here. It's up 50.1% from the lows that it reached, I think around 74,000 here in the midst of that pullback. The reality is this is an uptrend, right? We can see that, and we can see that with our eyes. And the problem, again, I want to continue to point out is that, the headlines we read, the opinions we hear, the colleague leaning over the water cooler, fear grows, right, inside of corrections, and it's just super important to always be able to understand, what time frame we're really talking about, right? So again, Bitcoin up 50% over the last kind of pullback here earlier this year. Here's the BitQ. Talked about this many times. One of the many crypto ETFs. Again, if you really kind of zoom your eyes out and kind of stick to the simple process here. I mean, the reality is there's higher highs and higher lows. It's pretty sloppy. I don't disagree, but again, you can see they're up 68.3%. Again, lagging at this point. Okay, so these crypto stocks had made highs ahead of Bitcoin earlier or later last year rather, and that is not happening right now. But again, remains to be seen what happens from here. Now, the S&P 500 is already short-term oversold here on a couple-day basis, and I'm using breadth here. So this is the breadth, the percentage of stocks greater than the 10-day moving average in the S&P 1500. So that's 1,500 stocks. You can see we're at 25%. So again, all that means has been a little bit of selling here in the last couple of days. Let's just kind of zoom out and let's use weekly charts. Left side, we got Bitcoin. Right side, we've got the S&P 500. I want to draw your attention again to my favorite indicator, my favorite oscillator, 5-period RSI. It's a relative strength index. At this point, all I've done is put the green circles on when we reach quote unquote oversold. And again, context means everything, right? So again, oversold in a downtrend is not the same as oversold in an uptrend, but I think we already know that both of these areas, stocks and certainly Bitcoin, have been in an uptrend for years. And so from that perspective, when these oversold points happen, which tend to be about once a year, you've got to look from the perspective of seeing opportunity, not seeing fear and risk. And that is the biggest problem, I think, from an emotional and mental makeup standpoint that we face as investors, is that, in the periods of time when suddenly turmoil seems obvious and it seems like fear is running high and seems like markets can always go lower, the reality is that, a lot of selling has taken place to turn our emotions in that way. And it's just so crucial to remember that, again, oversold points that happen in this case once per year, they're like sales, right? And again, does not always continue to mean they're going to go up. But the point is we need to be looking as if they will go up and be willing to take a look at the other side of that mental kind of hurdle that we might be facing. Let's look at foreign equities. Again, foreign equities have been strong recently, but again, it's not really a trend yet in this point. I'm still plotting versus the S&P 500. Here's the emerging Asia on the left side. You can still bigger picture uptrend here. Here's Canada through the lens of an American, just looking at EWC, which of course contains the Canadian dollar. And then again, we've got European stocks have been very strong, but again, the short term certainly overbought. You can see the trends over the multi-years here. We're certainly not dealing with kind of persistent uptrends. This has been a recent phenomenon. Now let's again just go look at the last kind of, here's 1 year, 3 year, 5 year of the big assets. And again, I've got one circle on here, and the only reason I'm circling the Canadian dollar over 5 years is you can see it's pretty much flat, right? So again, all I'm trying to do here is again continue to point out that we're all fed information, right? We're fed information in the headlines and the media we consume. And again, I think most people would sort of have an opinion on the Canadian dollar, and it wouldn't be that it's gone nowhere in 5 years, right? So again, look at the returns that we've seen. This is really post the COVID crash, right? So Bitcoin's up over 1,000%. The S&P is up almost a double, and again, slightly beating gold. And then you can see really what's probably most important on this screen is bonds. Bonds have been absolutely trashed. Interest rates continue to rise, yields that is, I should say. And again, this causes tremendous, I think, dislocation in the credit markets because these governments owe a lot of money. They got to roll it all over. And again, this is not what the government is going to want to see. We'll get to that in a minute. On the left side, we've got gold still in an uptrend. We did have that big bar against, but I mean, again, it's not in context. There's nothing really wrong. It didn't look like anything more than a sign of short-term exhaustion. Gold stocks, XGD in Toronto, they are certainly in an uptrend. They turned back upwards earlier this week here on a nice-looking impulsive bar out of oversold conditions. And again, that interests me always. These is a very strong group. Let's look at a few stocks here that clients in All in Sync here will know, and the bottom line is I want to talk about risk a little bit. So there's 3 stocks here. They're all actually what we'll call different risks, right? On the left we've got Tesla, and these are weekly charts, by the way, right? And again, all I want your eye to do is to sort of start to just zoom back and say, are these going from the lower left to the upper right? And what is the pattern that they're going to get there? So again, tell me whether you can see this. Even if you erase the fact that Tesla's on the left, Broadcom's in the middle, and RB Global is on the right, look at these trends, right? I would say my eye sees that on the right side, it's calmer, right? So you can see my ATR to price measure, which is a way of measuring how much daily volatility we would expect from a stock, 2.2% on RB Global. You can see Broadcom higher at 4, and then Tesla's a more volatile stock at 5.6. We always want to understand the volatilities of the stocks we invest in. Of course, each stock contributes to the overall volatility in a portfolio. Let's finish off with yields here. 30-year yields, again, over 5%. This is, I think it's exciting. Now, this is, of course, going to cause problems because, again, we got global bond markets here that are huge. And this is a tremendous amount of cost burden that is going to be hitting not only governments, but, again, people and financing of all kinds. We've been rising on the MACD histogram for the last 7 weeks. And at this point, I'm going to still continue to call this a bigger picture uptrend. When I zoom out, again, we can get caught in the noise. But again, as I'm trying to point out multiple times today, we got to constantly be aware of what's going on in the big picture. Let's finish off with Sector Watch. There's the gold stocks up at the top of the list. There's the energy stocks on the bottom of the list. Again, we've got lots of green here, lots of improvement. There's been massive buying. There's been a lot of bread surges. There's been a lot of things going on. I continue to see this now as a market. Again, dips can be bought. Again, sentiment got way too negative. Sentiment got way too washed out. It is what it is. These will be markets. Please follow me on X. I'm at David Cox RJ. And thanks again for your time this week. This has been David Cox, Portfolio Manager at Financially in Sync in Waterloo, Canada.